Good evening, everyone. On behalf of CA Sri Lanka Kuwait chapter, I warmly welcome all of you for today's our live webinar on Mastering Tax Compliance. I am Nilanthi Asurmuni, an Executive Committee member of CA Sri Lanka Kuwait chapter. Before we begin the event, I want to inform you that towards the end of the session, we will be sharing a link. If you are a CA member, please follow the link, fill in the form and submit your CPD hours. If you have any questions or if you need any clarifications during the event regarding the session, or if you want to speak to the speaker, please submit all your questions in the Q&A section. We will make sure we answer all your queries during the Q&A session. So friends, today's session is all about personal income taxation. The objective of today's session is to provide you an understanding of personal income tax framework in Sri Lanka. During today's session, we are going to cover a couple of topics, including tax return submission process, what are the tax benefits available for a non-resident, how to reduce unpaid tax arrears, how we can claim refund for past tax periods, how we can plan for future taxes using pre-tax planning tools, and most importantly, what are the upcoming tax changes which can have an impact on personal income taxation. With that, it is my great pleasure to introduce you to our speaker for today, Mr. Mahesh Yogarajan. With due respect to Mr. Yogarajan, I am going to read his profile for you. Mr. Yogarajan is the founder and CEO of Lanka.tax, Sri Lanka's digital tax preparation company focused on simplifying individual income tax filing and ensuring compliance. With the background in corporate finance, he has raised over $250 million for Sri Lankan companies, including major finances from EXIM Bank of Malaysia, the Asian Development Bank, CIMB Bank, and others, as well as equity funding for Lanka.tax. Additionally, he is the treasurer and president-elect for the Rotary Club of Colombo, Uptown. He also served on the Finance Subcommittee for Sri Lanka's AI strategy under the President's Office. Mr. Yogarajan also possesses several academic and professional qualifications. He holds a Master of Law from the University of West London. He is also a member of Chartered Institute of Management Accountants UK. He is also a member of the Chartered Institute of Marketing UK. Without further ado, I will now hand over the session to our speaker. Over to you, Mr. Yogarajan.
Thanks for the intro, Nilanthi. A little excessive, but lovely to be here. Before we get started, look, I would like to thank all of you for being here today, for giving up your time on a Saturday evening. I hope this session is useful. If I'm not clear about anything, please put the questions in the Q&A section and we'll try our best to address all of them. I think the important thing here is that I'll explain the structure of what we're going to take you through, so you understand in pretty much that same order, so that you kind of understand at what point your questions may be answered. So I'm just going to share the screen now. Nilanthi, I'm audible, right?
Yes, you are.
Super. So again, a big thank you to the Chartered Institute, CA Sri Lanka, and especially the Kuwait chapter for connecting us. Riaz, Nilanthi, Tarindu, Nabil, really appreciate you putting this together. I hope it is useful for all the people who are giving up their valuable time to be with us. So before we get started, I think it's important to start with why, right? Why do we do this? Why are we involved in this sort of work? And fundamentally, it started with the COVID lockdowns back in 2020. I think you all know that a lot of people had were affected and their incomes were affected. So me and a group of friends got together and put together a website in 8 days, bilingual, where we helped people obtain loan relief letters, the moratorium letters that they required. There were many sectors who were eligible for this, and by answering a few simple questions, they were able to get a customized letter with the central bank direction clauses included, so that the banks would not refuse the loan moratoriums that these people were justly entitled to. So that's how we started. Then we've done a bunch of other webinars in collaboration with Slascom and some with some organized by us, where we focus on personal financial well-being, right? Because you work so hard. Every single one of you works really hard to earn the money that you earn, right? And it's a crime to give it up and not to exploit the fact that we have some money to earn more money. And then right. So that's where we start. And this is what we'll cover today. So we'll first look at your tax obligations. Therefore, we'll look at registrations. That's towards the end of it, typical issues. We look at payments, how returns are to be filed. Then let's look at what easy tools are available in the market today for free to do estimations and calculations of your taxes. We will explain to you which expense categories or relief or deductions were applicable before, which ones are still applicable. We'll explain the 7 compliance deadlines, and we'll then summarize it by looking at what it was before and today what it is, right? Then we'll briefly look at what changed them so that, well, hopefully you won't have to. Right. Now, one of the key areas that I think would be most useful for the audience today is the tax treatment for interest income and rental income for non-residents and for non-citizens, right? And we'll compare the situations and look at which point it's cheaper to be, for which asset to be held by which person, so you can start planning your finances. And look, you guys are members of the Chartered Institute, right? So you won't need my help after I explain the basics. And I really hope that you absorb what we're trying to explain and the theory behind it so that you can apply it for yourself and save a lot of money for yourself. And then we'll look at what you should expect from a tax consultant if you are looking for one, what key tasks you need to perform in order to be compliant, and what features we offer on our platform for completely free, right? Let's get started. First things first, we need to look at what myths are revolve around taxation, right? Because there are a lot of stories being told by a variety of people, and we'll go through them, right? The first and most important myth, well, let's start with the fact. The only 2 income sources that are tax-free, right, are foreign income received into Sri Lanka through a bank account for services consumed overseas. Now, even though the definition says this, generally, if the foreign income comes into your account, we haven't seen a problem with whether the service was consumed overseas or not, right? But legally, that's where it is. Second thing is government pensions. Again, the government sector gets an advantage over us private sector guys and girls. Government pensions are tax-free. Private pensions are taxable. So what then? If these are income tax-free, What income sources are tax liable? Everything else, whether it is employment income, business income, investment income. And investment income covers rental income, fixed deposit income, savings interest income, even a business. And okay, so that's there. Then, yeah, I don't need to do definitions of these things for you all, right? You all are, well, this is the Chartered Institute's webinar. So now, some people say, I have only employment income. These are residents. The first section is just for residents, and then we'll get to the special stuff for non-residents and non-citizens. So I have only employment income, so I don't need to file a tax return. Now, that is not true. If your income is above 250,000 rupees, or that's from the period from 1st Jan 2020 until 31st December 2022. From 1st Jan 2023 until today, if your income exceeds 100,000 rupees, you need to open. Now, I want to address something. There was a gazette issue which, excuse us, my office is on duplication opposite Liberty Plaza, so a lot of buses going by. Sorry about that. So here's the thing, right? That circular said that members of the Institute of Chartered Accountants had to register for taxes, and it didn't say that you had to be resident. So technically, by law, you should open a tax, get yourself a TIN number, but they're not enforcing the return filing if you are non-resident, right? So the law is one thing, practical is another, and I think we have all experienced this through our work. Now, let's look at some more myths. If I pay tax, I don't need to file a tax return. Again, not correct. HR, you'd be surprised at the number of people who call us from very senior, in very senior roles, who say, no, HR does my taxes for me. But that's not true. And so this is the dodgy one, right? Taxes can be paid from today. I don't have to worry about past taxes. Now, the law doesn't say that, but again, practically speaking, we see that the Inland Revenue Department has yet to start going after many people for past taxes due, but that remain unpaid. So take your chances if you wish to, but the law says very clearly that there's no start from today business, right? And let's think back to this HR does my tax return, right? HR doesn't know anything about your personal income. They don't know about the value of your FDs, whether you have a property that you inherited or bought, or whether you do a side gig, because today this side gig thing is quite common, right? You certainly don't want HR knowing about it. They won't know about it. So your tax return cannot be completed without that, right? Then the next thing is, this is for residents only, please. Withholding tax on savings account interest and fixed deposit interest is not final tax. So you may have to top up depending on your income, right? Typically, if your income is under 2.3 million, you may not have to top up because the overall tax due, you may be due a refund between 1.2 million and 2.3 million, right? I'll show you that again in a graph, which very clearly shows how to make that decision. Another misconception is that I paid pay tax, I only need a TIN number, I don't need to file a tax return. Now the government has enforcement today is quite good, and it prevents you from renewing your revenue license, applying for a building plan, opening a current account. So far, savings accounts, you still seem to be able to open, right? Please understand that I'm not telling you to violate any of the rules. I'm just telling you what is practically implemented and enforced. And you can't register a business without a TIN number. Central bank has started asking for tax clearances for foreign remittances, including claiming your migration allowance. See, if you're living overseas, chances are you took what money you had to set up and start your career overseas, right? You have now made some money there, but chances are you've sent some money back to Sri Lanka for some investment or for something like or you may have inherited something like a property or some money. And how do you get that money back out, right? Today, the central bank will allow you to claim your initial migration allowance. I believe it was recently increased to $100,000 for the initial migration and then $30,000 a year after that. So here's an opportunity for you all to think about. There are a lot of people who inherited property here, sold it, and are unable to get their money out. And because their money is typically in the safest form of investment, which is a fixed deposit or a savings account, they have a tax liability. They are unable to take their money out also because they haven't got a tax clearance yet. So we've ended up doing I'm just relating how this came about. We've ended up doing a lot of tax clearances for these people in order to claim this $100,000 and get their money back out so that they can live better lives in their new homes. Right. Now, look, you all are very intelligent people doing chartered, so you understand what a progressive tax is, which is, but for the sake of it, I'll go over it. The more you earn, the more you pay. If you earn 200,000 rupees, you end up paying just over 10,000 a month, right? If you earn 400,000 rupees, it's not double that. It's about 70,000 a month, right? So just bear that in mind, right? And to explain this a little clearer, after 3.7 million rupees in income, if you're a resident of Sri Lanka, everything beyond the 3.7 million is taxed at 36%, right? So we'll give you even strategies. If you're a practicing, if you do some sort of business or you provide professional or consulting services, we'll give you a list of expenses that you can claim against your income to reduce your profit from your business, right? Now, let's go over the basics. Again, I'm guessing you guys know this already, but for completeness, we'll go through it, right? 3 types of income, and then we'll cover deductions. Obviously, employment income, which is your salary. Then you have business income, which is like your side hustle, side gig, or it could be your primary income if you're a consultant that provides these services. Then we've got investment income. Investment income covers a few types. Rental income is considered investment income, interest income, whether it is from savings or FD. And some people say, no, I don't have savings interest. Now, here's the problem. A lot of the banks have already been connected to the IRD's system. So when you fill out your tax return, if you're on the simplified filing system, which is actually very easy, it will pre-fill all the interest income that with the information they have received from banks. Now, the thing you have to be careful about here is it's not always accurate. It's not 100% accurate. So in a situation where it's not accurate, you have to delete it and re-enter it. Right. So then you have dividend income. Now, dividend income is taxed at 5%, sorry, at 15%, and that's considered final. So you don't have to top up, but you have to disclose it. Then you have capital gains. Now, capital gains, you don't have to declare on your normal return. There's a separate capital gain return. Let's say you inherit a property, right? And you sell it because, nobody's around to live in it. Now, here's where you have to be careful. There are 2 rules that you have, 2 conditions. If you fulfill them, you don't have to pay capital gains tax. you need to have owned the property for 3 years and lived in it for at least 2 of those 3 years for it to be considered your primary residence. Now, you have to be very careful here. Some people own the property, have bills in their name, and think that that's enough. The problem is the government, the tax department checks whether your vote was registered to that address. And if it's not, even if it's a genuine situation where that's the only property you own, you may not be able to claim the capital gain exemption because they will disallow it, right? So make sure to check your voting address if that is the case, because you have to have lived in it for 2 years and owned it for 3, right? So that's a capital gains exemption situation, right? Now let's look at deductions. When we look at deductions, sorry, just trying to check if there are some slides. Yeah. So guys, look, a lot of you all are asking whether we can share the presentation. I think we can share the video a little later, parts of it, but we don't share this presentation in case it's it's adjusted and then shown elsewhere, which could become a liability problem for us. Really sorry. Okay, let's look at deductions. What's the point of a deduction? The point of a deduction is to use whatever relief is available in the Act to reduce your taxable income. Right. And okay. So if you invest in a solar power system, you can claim the full value of the solar power system if you invested in it after the 1st of April 2021. So that doesn't follow any of the other tax changes or the deadlines. That came on in its own act, the 1st of April 2021 onwards. If you invested in a solar power system, you can claim 600,000 rupees per year until the full amount is claimed. Right? Now, the important thing to remember here, and I'll show you an example of how it could be charged, right? Now, the important thing to remember here is if your salary is above 3.7 million, right? Let's just assume that it's 600,000 more than 3.7 million at 4.3 million, right? That last 600,000 bucks, you're paying 36% in taxes. Even if it has been deducted as pay tax, all you need to do is to file your return and show the 600,000, which then reduces your tax liability by 36% off, in this case, 36% off the 600,000. So you get 216,000 rupees as a refund. Now, remember this refund thing, because I will come back to you and tell you how 60% of that refund amount can be saved in cash immediately, and how, and genuinely, even if you can't claim the 60%, which we'll explain in a second, the department is actually paying refunds. We have many clients who have got statements from the IRD, some which have been originated by the IRD themselves, saying, hey, you're entitled to this refund. Now, this letter is a little bit naughty, right? The government's doing, the tax department's doing something a little naughty there. They're saying that you have to come and meet us within 14 days. But usually the printed letter date and the posted date are 2 weeks apart, so it's already expired. Don't worry about that. They cannot deny you this refund. You just need to make sure that you go and meet them, or address it in writing. And right now, but they are paying cash refunds. Okay, it takes a little time, but they do pay. Right, then that's solar power. Donations. There are 2 types of donations that you can use to reduce your taxable income. Now, the first one is donations to approved charities. The Inland Revenue has a list of 80 something approved charities, right? If you donate up to 75,000 rupees or a percentage of your gross income, whichever is lower applies, so generally 75,000, you can reduce that from your taxable income. So potentially you have the 600,000 from solar, another 75,000 you can reduce your liability by. So, sorry, you can reduce your taxable income by 36% of that. If your income is above 3.7 million, will be saved when you pay. Third thing is rental relief. Let's say you earn 200,000 rupees, and we'll go into rental relief a little later. Whatever your rental income is, 25% of your rental income can immediately be struck off and as maintenance expenses. Now, you have to be a little careful. You can't claim actual maintenance in 1 year on the year that you refurbish it and then switch back to 25%. There are rules around it. Then separately, whatever money you have in fixed deposits or any other interest-bearing account will have 5% deducted on a monthly basis and paid to the Inland Revenue as withholding tax. Now, remember, all non-residents have a lot of benefit here, and I'll tell you how to make the most of this benefit in a later slide, which is very focused on that. Just make sure that you get these withholding tax certificates, because otherwise you're paying money double, right? It's really unnecessary. Right, and so that's paid monthly, deducted at source. You don't have a choice. Pay tax is paid monthly, deducted at source. And then you have the quarterly payments. You do the quarterly payments based on your estimate. Don't worry, I'll show you the deadlines, that the 7 deadlines, tax deadlines that are applicable each year, and what you have to do for them, right? And there were some old deduction categories. We will even compare what deductions were available, why they were available, and the current deductions that are available, right? So once you do this, what you need to do is, give me 1 second. I'm just going to put my pointer on. Once you've added your employment, business, and investment income and reduced whatever allowable deductions or prepayments of tax and reduced your relief, you can calculate your tax liability. You need to pay this tax by the 30th of September each year. You also need to make your quarterly payments, and then you need to file your tax return by the 30th of November. Don't worry, I've done a lot of slides which you can take screenshots and take away a lot of this important information, right? Just remember that one of the last slides is how to fix your TIN and PIN issues with the IRD for free. What letters you need to send, we will give you the templates for free, so that, please excuse me, there was a bus passing by. So then we've got, yeah, you need to have access to your TIN and PIN so that you can log in and do this online. Now, here's the example from the guide of that the Inland Revenue provides, right? Here, you show your employment income, all your other income sources. You have your total assessable income. You reduce 25% as your rental relief from your rental income. You can reduce your solar power expenditure. You can reduce the balance of your you can reduce the balance. So let's say you buy a solar power system for 1.5 million rupees, 600,000 per year. So remember this, right? The tax year goes from 1st April to 31st March. So if you want to claim it in this year's return and you haven't bought one yet, too late. If you spend now, you can claim it next November before the 30th in your return. So it makes no sense for you not to buy a solar power system because you get 36% discount, essentially, right? Because you pay your taxes anyway. You might as well put that in your estimation and reduce that from your quarterly payments, which means you get to start saving on your solar power installation immediately. Right. So you work out your assessable income, take off your deductions, and then you have a tax liable income. Then you apply, once you eliminate the 1.2 million, which is your everybody's personal relief, then you apply the 6, 12, 18, 24, 30, and 36% to these, as shown here. The first 5 slabs are 500,000 each, and the balance gets charged at 36%. Then you have your total tax payable. You take away your quarterly payments, your APIT, whatever withholding tax has been paid. And then you have your balance tax, which was due technically almost 2 months ago. But just pay it as fast as you can. Okay. You don't need to worry about how to calculate this. You can just visit Lanka.tax, www.lanka.tax, and click on 2324 calculator. You punch in the numbers there, it'll show you the resulting tax liability because we've automated all of this. If you want, you can put in your name and email and send it to yourself so that you have a record of that estimation, which has a few more details like the withholding tax amount assumed and things like that, right? Which isn't there on the normal calculator. Okay, now we're just going to go look at the deductions that were applicable before and the deductions that are now applicable, right? So for a 3-year period from the 1st of Jan 2020 until the 31st of December 2022, we had a really good time, right? And I'll explain how good in a graph where you can see exactly how little tax all of us paid in Sri Lanka, right? Which led to the mess that we got into. But and look, I'm staying away from politics. It has no bearing. These are facts of life. We have to pay tax. Paying tax is the cost of living in a civilized society, right? So let's quickly look at what these expenses were. Now, previously, they gave us up to 1.2 million on all of these categories. That's except for solar power. Solar power was always additional to the regular relief that we were given. So those days, the reason they brought all of this in, right, was to encourage growth in the housing loan interest rebate was offered so that they encouraged people to own their own homes, right? Then on top of owning your own home, it also boosted the construction industry, which employs 9% of the population and contributes 8% of GDP, which came down significantly over the last 2 years because of the realigning of the economy, right? Then investments in the stock exchange were also tax deductible. And best of all, these investments were taken as gross investment. So we were helping some clients put in 200,000 rupees and they were day trading this at a lower commission 6 times over to make up the 1.2 million, which is completely legal, right? Our goal is to help you pay the minimum amount of tax. This is how we did it. Then school fees or educational expenses for even a master's that you paid for yourself and school fees obviously not for yourself, but your kids. If you paid it, you showed the receipts, you could reduce it, right? Then little nuance here, the amounts paid to foreign universities. Let's say you did a degree where, there was a local institution that taught you, but you had to pay fees, that 1,000, 2,000 pounds overseas. That overseas payment was not tax deductible. The local amount was. That grew the education industry in a big way. And then, okay, medical expenses. If you have a real medical expense, obviously you shouldn't double claim if if the company insurance covered it, you shouldn't double claim. But if you had spent anything on your own medical expenses, so senior citizens who buy their medicines regularly were able to claim all of it back. And essentially back then, some were able to get up to 18% back. So essentially a discount. Then you had medical insurance. Now here, I'd like to tell you a little secret. We found that a lot of life insurance policies, not medical policies, right? But the life policies had medical components, right? They added a medical rider to it. That portion, some insurance companies were able to split it up and tell you. So you could claim that also. And if you want that letter, you can get that letter free of charge using our platform. Then, again, I've explained donations, I've explained solar power. So with the IMF bailout, we lost a lot of the relief that was offered because the government needed to increase tax collection. So they took away everything except for donations and solar power, right? So take advantage of your solar power deduction before it goes away. And one other thing, right? Right through, we looked at the two sources of exempt income, right? Private sector, we are only eligible for the dollar income. Now, the issue with this dollar income is that the Inland Revenue today is asking you to declare how much you earned in exempt income. Why they're tracking it all of a sudden is leads me to believe, and they have hinted at it in the IMF reports, saying that they may take away that exemption. And that could have very negative, it could have a very negative impact on our economy, because service businesses like software engineering, for example, which doesn't need to be based anywhere, would suddenly move overseas, because why should they pay tax here when they're delivering a digital service and they could invoice from anywhere, right? So just something to think about. Cool. Next slide. Now, this is a slide that I think you should take a screenshot of. It lists all the documents that are required or accepted in order to claim these deductions, and it gives you like a description of it, right? So please take a screenshot. We've discussed this already, so I'm just going to move on from here. I'll give it another 10 seconds to take a quick screenshot. Right. So while we leave this on screen, there's a quick question saying that somebody's on the Net Plus. Well, they didn't say Net Plus, but they said they export electricity to the grid. Now, I'm going to explain something to you, right? I've set up a solar power company where we go and set up industrial scale solar power installations on other people's roofs. And then we supply to the grid at 27 rupees. Now, you could also do that at your residence. Now, here's the thing. If you're looking at solar power, right, I have nothing to sell you. We do only for industrial scale, right? So I'm just telling you this for your benefit. If you're able to reduce your own consumption, right, which the highest units, I think, cost something like 67 rupees a unit, but you're being paid 27 rupees a unit, please don't sell to the grid. Set off your consumption using your generation. For that, you have net metering, which is the better one. Net accounting becomes messy, but this is not a solo webinar, so I'm going to stay off that. My recommendation is when you install your solar power system, look at your last 3 months' bills, right? This is a tax deductible expense, hence it's relevant. Look at your last 6 months' bills. Don't look to make your bill zero, because the first few units are cheap. So you need to benefit from the subsidy, right? But remember that when you have a solar power system, your consumption goes up naturally, right? Because it's free if you're on net metering. So you need to plan your capacity like that. If you're earning income at the 27 rupees by supplying to the grid, then you have to show that. So the supply of electricity to the supply of electricity is not VAT liable, right? But it is income tax liable. So you have to show that and you need to get paid, right? So we have a question. Why are we looking at 2022 tax laws, right? Because, wait for the next slide, you'll understand. So if you do 22-23 tax return, right? I really appreciate these questions that you all are asking very openly, right? We're looking at the old law because if you had installed a solar system during that period, or you had a housing loan, or you had educational expenses or medical expenses, medical insurance, or you invested in the stock exchange, right? For the first 9 months of that tax year, you were entitled to a refund, right? And for that year, if you can claim at 18, well, for the first 9 months, you can claim 18% of 2.25 million rupees, because 3/4 of 3 million is 2.25 million at 18%, plus 1/4 at 36% for solar only, right? You could save well over 200,000 rupees by filing your 22-23 tax return. Now, why would you go back and look at that, right? Here's the point. If you had those expenses and if you had employment income with very little FD or any other source of income, which is about 80% of the population is like that, right? At all levels of income, that much I can tell you, right? So if you had that, you file a return, show, let's say, 300,000 rupees in potential refund. 60% of that you claim in the next year. As without an audit, you can claim 60% of the previous year's refund in this year, right? So 23-24 return, even if you have a tax payable amount, you may not need to pay it because you can claim it. You can set it off against the previous year's refund, 60% of it, without an audit, right? So immediate cash saving. Right. So technically, by law, you're supposed to file the 22-23 tax return anyway. If you choose on your own, I'm not advising it, but if you choose on your own not to do it, you need to start thinking about, did you have deductions during that period? And how much would you save if you put 60% and did it for this year? So if you want to estimate that, again, don't stress. We have a separate tax calculator on our website for that period, and we have a tax calculator for the current period. So you can go back, just punch in your basic numbers on the top there, see what your potential refund would be, compare that with the amount that you have to pay this year, and then make a decision, right? Cool. Next thing, for the current year, what do you have to do, right? First thing is that you need to pay your 23-24 tax payment. It is overdue. It was due on the 30th of September. But most people hadn't even calculated it at that point. So they will calculate it now and pay it a little late. I don't know whether you will incur a penalty, but I'll tell you what the law says, right? I hope you don't incur a penalty, but the law says that you could, that essentially they will charge you an upfront penalty plus 1.5% interest every month on amounts owed to them but not paid, right? Recently, some people have been receiving queries as to why their quarterly tax payment wasn't made on time. So just watch out, right? So why do I talk about quarterly? Because the current year, the 24-25 tax year that started on the 1st of April 2024 is, half done, which means that you have already missed two tax payment deadlines, which is the 15th of August, which is when the estimation for the current year is due, and the first quarter payment is also due then. 3 months later, which was the 15th of November, POA day, and we inquired from the tax department, hey, it's a POA day, banks are closed, how do we make payments? You know what they said? It made a lot of sense. We're not accepting check payments anymore, so the bank doesn't need to be open. We've asked people to pay online. Yes, you can pay in cash, but people who want to pay in cash better pay early because you can transfer online any day. So that whole attitude of tolerance is going away. Just be wary, right? So I'll just go through and summarize the actions you need to take each year from now on, right? There are 7 actions. It's really simple, right? The 7 actions, you have to file an estimation on the 15th of August, right? And that estimation is for the period from 1st April till 31st March. Then you have to file a final return, which is like a budget versus actual. Very simple. Based on the estimate or the budgeted amount, you make 4 quarterly tax payments. They could be very small because you have a small amount of FD interest or a small rental income, but you need to pay them quarterly. And then at the end of the year, once you calculate everything, 30th of September, you need to pay your final payment so that you top up on everything that you didn't pay. I'm going to spend a second and explain what I mean by top up. If your salary is above 3.7 million, you would have earned, a good salary, right? And then you would have paid tax on every rupee outside your salary at 36%. Okay. Now, let's take the example that we used before at 4.3 million rupees at a with a 4.3 million rupee salary. Now, if you earn 4.3 million as a salary, you would, and you got, let's say, an extra million rupees from interest income. On that million rupees, only 50,000 or 5% has been deducted and paid to the tax department as withholding tax. But then you should pay it at 36 because your salary is high, took it above that. That means you have to pay an additional 31% on all your interest income. So that's what I talk about as a top up, right? Now, I'm just going to move on because for a moment there I forgot I'm speaking to chartered accountants. Cool. Now, so again, so we just got a quick question saying, can we deduct old expenses? You can't deduct old expenses this year. If you want, you can deduct it in that year by filing a tax return for that year. And if that amount is significant, well, so you need to decide if that amount is significant, you definitely should file and claim 60% of it now. Cool. Moving on. So in summary, these are the changes. Your tax-free threshold went from 3 million to 1.2. right? Down. Each slab, which was 3 million before per year, came to 500,000. The maximum rate doubled from 18 to 36. The pay tax went from optional to mandatory. Interest income went from no withholding to withholding, and it's definitely not final tax. It wasn't final tax before either. Dividend income was previously all the income streams were added. Now it's final tax. You just have to disclose that you earned it. But there's nothing additional to pay, no top up required. Then rental income, again, you had 25% relief from rental income as before. Now you have the same relief, but now 10%, if your rental income exceeds 100,000 rupees a month, the person who's paying you that amount needs to deduct 10% and pay it as register as. Now this is the thing, right? They have to register as a withholding tax agent, pay the withholding tax on a monthly basis, issue you a withholding tax certificate, and only which is quite rare, right? So here's where you have to be careful. As the person paying the rent, as the tenant, okay, the way the act is worded, it says that it is the responsibility of the recipient of which is the landlord or the owner of the property to pay this tax. However, if they do not pay this tax, the responsibility is back to the person who paid it. So if you're renting, just be careful. You might end up having to pay the 10% extra out of pocket if the other person doesn't do their duty. Now, service payments are subject to 5% withholding tax if paid to an individual. Right. And like I explained, all these tax deductible areas went away, and now these are back. Awesome. Then, now, remember I told you, I'll tell you how good the time we had. So before this new tax law came in 2020, pay tax accounted for about 45 billion a year, which crashed to 15 and 15.4 billion the next 2 years. 2022, it went up to 26 billion rupees. And with the new changes that we just discussed, it went to 100 billion plus in collection, right? Now, here's the scary part. There are some new taxes coming, right? I've labeled them 2024 property tax and 2024 gift and inheritance tax. That is I'll explain why in a second, but first of all, you need to understand how they're going to charge this. So the IMF report that discusses this is not very clear. It says it could offer a primary residence exemption. But when this property tax was in force in 2006, the primary residence exemption and a very high threshold above which you paid meant that the collection was very small. So it doesn't suit the country today when we can't balance the budget, right? So remember, the more perks they give for free, or the more benefits any government gives the people, the more us taxpayers have to fund it. And that's where the property tax is being brought in. And in comparison to our pay tax, it is expected to bring in 363 billion rupees, which is more than 3.5 times the amount they collected from all the pay tax, right? So watch out. Okay, then there's gift and inheritance tax. Today, you can gift anything, shares, anything you want to anybody else, and there's no tax for it, right? So we can inherit things without we can inherit and we can give to our loved ones or otherwise. Assets that we have, and it won't be liable for tax. Now, the crazy thing here is, the reason I've labeled it as 2024 as well, is that last year they said that a lot of these taxes would come into force during the year. And they started on the 1st of January, 2020, 1st of January, right? So what you need to remember is, if you're planning any asset transfers, any tax planning for the family, you better get started really fast, because can you imagine how much this tax is going to hurt? And one of the ways they're going to hurt, well, they're going to collect more money, is by increasing the stamp duty to 6% on certain transactions. That's one part. And then separately, the way they're going to administer the property tax is by telling us, okay, so I missed something. I'm just going to go back and explain this to you. Sorry. The part I missed was, this property tax will be collected as a imputed rental income tax. What does imputed rental income tax mean? If you live in a property that, for example, is 50 million rupees, you would declare that value, and then based on that value, they will tell you how much tax to pay on some sort of scale, right? So you're not earning any income, but it's imputed that if that property was rented out, it would earn so much, and therefore you have to pay X amount of tax. Now, here's the next part of it, right? If your property is already rented out, you don't need to worry about it, because you're already declaring the rental income, paying the withholding tax, and paying income tax on it. So because it gets caught under personal income tax, you don't have to worry about imputed rental income tax. Now, let me tell you who this is going to hurt the most. Drive around Colombo, or when you're on holiday next, drive around Colombo or any of the major cities and look at these apartments that have been sold, right? Mostly to people like yourselves who have taken a risk, been bold, left the country, endured hardship, earned money, become successful overseas as well, and have sent money back to buy real estate, to give back to the country, and to own an asset at home. Now, if your asset isn't productive, if it isn't earning any money, suddenly it starts costing you money to hold, right? So it is forcing assets to become productive, but in a way that hurts people, right? So drive around in the night and look at the amount of empty apartments in darkness and think about how much tax impact that's going to have. And then what happens when people start selling those units? Will they sell it? Will they pay the tax? Will they underdeclare the valuation and imputed rent and pay less? Or will they do it honestly, right? So a lot of speculation there. I'm not speculating about anything. All I'm saying is these are the things to think about if you're considering investing in real estate. Next one. Now, that's the basic. Those are the basics of tax. So I'm going to start. So if you're looking for a tax consultant, I'm going to tell you the things that you need to expect from a good tax consultant. And straight after that, we will go into all the tax benefits and all the tax benefits that a non-resident, not a foreign, a non-resident of Sri Lanka who is a citizen can benefit, and the difference between a non-resident, non-citizen compared with the local person. right? And we've got lots of graphs and all to show you this very clearly so that you can decide with ease who should own the property, especially if you're married to a non-citizen who's non-resident, right? Yeah. So just gonna start this video.
What you expect from your tax? You should get updates on your clean application. The evidence of the work done with the explanations of the next steps in the registration process. You shouldn't ever worry about which information to collect, and if you collected the right information, because your tax person should customize the letters for you and email them to you, so that all you have to do is email them out to the banks, your university, your insurance company, maybe your children's schools, or even your stockbroker, so that you can claim these expenses and reduce your taxes. You shouldn't have to learn anything about your taxes, but you should be explained everything over the phone during an email call. You shouldn't need to remember which tax documents you have submitted so far and which documents you have left to submit. You should have a simple list which you can access on a dashboard from anywhere at any time. You should get reminders at least a month before every tax deadline, and there are 7 everywhere. You should also have transparency in the progress of the work being done for you, not just stories for what you do for. You should also make sure that you get an email confirmation of everything that is done so that you have permanent records of your own. You must get assistance when you calculate your take-home salary, when you plan your next income and you plan your finances and look. Before any return is filed, you should be able to check the calculation and able to confirm it with written records and this confirmation so that you're really in control of what is submitted to the tax department in your annual submissions. You should demand that your records are properly maintained so you can access them with ease and you can request them just over a simple form. You shouldn't also worry about paying your taxes directly. You should get instructions about how to fill the forms and have them filled for you. Get the payment confirmations from the banks, email them, and if the service is really special, when you start from cash, you should be able to apply for a free credit card that you can swipe and pay your taxes in installments as if you bought a fridge. And since you use WhatsApp so much, shouldn't reminders and status updates come through that?
So, look, I'm just gonna quickly go over little things, right? If what you want or what you need is to download documents to request information for whichever year, 22, 23, before that, or 23, 24, right? 22, 23, especially, you have to be careful because there were 2 periods, the first 9-month period and the last 3 months. So you need to request the right information from banks and from whoever else is giving it to you so that you don't end up filing a tax return that's wrong. Now you can visit Lanka.tax, right? Fill out your profile completely free. Log in, you visit Lanka.tax, click login, you can log into your menu, click download documents, and you can download all those documents for completely free. We don't charge you at all for any of that, right? You can use a tax calculator for completely free, all the years. You can use and you can use that to estimate your taxes for the current year as well. If you want us to do a calculation, that's charged. We have a super cheap package at like $7,000 where just do the calculation, send it back to you with a guide. Click here to enter this information, enter that information. If you can't be bothered doing all that and you want it done for you, then we have packages ranging from 20,000 rupees for 2 income sources, 32,500 for 3 income sources and more. And then we have like 350,000 rupee packages. Then those are just the listed ones, right? But essentially what I'm saying is, even if you need to reset your PIN, change your email address, there are formats that the IRD or certain piece of information that the IRD expects. Those letters are also free and also available on our on the customer portal, which you will have access to. Just fill out a profile. So as much as this is a little bit of a product plug, it's also telling you all the free stuff that is available, and there's no commitment. Cool. Now, are we ready for okay, so before we get on to this section, there's a interesting quick question. Withholding tax paid on rent, can it be claimed in subsequent years? So no, but if you've claimed it on let's say on one return, and if that return at the end of it shows that there's a refund, then you can claim 60% of that refund in the subsequent year. So if that is your only income source and it ends up being not tax liable, rather, if the previous year shows a refund, then you can claim that in the subsequent year. But you can't just take that element and pay it elsewhere, right? So, right, now I'm not going to go into any further discussion on these taxes, because let's leave it for the Q&A. Right. Here's the thing, right? If you're a citizen who's non-resident, okay, here are the benefits for you. Sorry, there's a pop-up. Okay. Citizens who are non-resident. So, CA Sri Lanka, Kuwait chapter, listen up. Here is how you're better off than us fellows living here. You are entitled as a citizen for your 1.2 million rupees of tax relief. And interest income is 5% final tax, right? So whereas if I receive an income on it, I'll have to top up and maybe pay 31% extra after withholding tax. You don't have to, okay? And I'm going to give you a story about how I've seen it being used. Now, rental income, remember, withholding tax on interest income is final. But rental income withholding tax is not final. You have to top up, right? The 25% relief is there. Now, then we have, how do you claim it? File a tax return, right? Now, here's a simple method, right? There's a rule, there's a very clear section called income splitting, and it is illegal to split income, which kind of answers one of the questions that was asked. I will never recommend something illegal, but I'm giving you an example now of how I've seen it being used. A mother had the money for her son's education in Australia. So she deposited all of that money in her son's bank account in Sri Lanka and said, take money as you need. And, you know, I've done my part. I funded your education. Very lucky boy. Now he goes to Australia and decides, I'm going to work and earn my way through university. So he doesn't use any of the money, right? And he comes back 4 years later, and this has now accumulated to a fairly large amount. No tax was due because he was overseas. No top-up, final tax. But you have to inform the bank. Please remember, you have to inform the bank that you live in the country. They'll adjust their status to non-resident. Then you need to, when you file your tax return, make sure that you file it as a non-resident, okay? So then the son comes back and he goes, look, Amma, I'm really proud of myself. I covered it all myself. And thanks a lot for giving me the money, but here you go, I'm returning it. Now, suddenly the mother gave the money away, got it back 4 years later, tax-free, without having lost any of the interest. right? But look, I mean, I'll defer to you to the chart with this to CA Sri Lanka. The rights and rewards of ownership of the asset must transfer, right? So you can't, yeah, that's what it is. And another quick thing. I've seen a lot of people who have joint accounts with their parents just to facilitate like going to the bank, getting money out, signing stuff. Now the parents are senior citizens, right? Now here's the problem. If it's a joint account, half that income goes under each name, right? Which means sometimes these people are not receiving the interest. The interest is going to somebody else. But because the asset is half theirs, it ends up being that they have to pay an additional 31% on half the money that they never got, which they then start claiming. It becomes very messy. So you need to balance both out. Now, easy to talk about this in like big words. I'll explain it in a graph, right? If you're a resident citizen, right, the orange one, interest income, you have, and let's say interest income only, okay? 1.2 million is tax-free. Then as you earn more, your liability, right, on the orange line, citizen, resident, okay? Your liability starts building only after 1.2, but you're entitled to a refund because withholding tax has been taken from you at 5%, right? So only after about just under 2.3 million does it become taxable at all. So people in this bracket have refunds to get. They're not a lot, but they're refunds, right? And the tax department is actually really good at helping the senior citizens because there's a form, an application that you submit saying that your interest income, that you're entitled to a refund, and you submit that, you get it. Now, there's a mistake on the form. I have addressed this with the Commissioner General and the person who writes the instructions. The form has a declaration which is wrong. It says that your income is that your total income is under 1.2 million. Now, here's the problem. Up to 1.2 million, you don't need to file a tax return. So if you don't file a tax return, you can't claim a refund, right? So that line is 0. You can still claim it, but I'm not showing because there's no reason to file a tax return by law. But after that, above 1.2, you still have a refund. But that refund, so just watch out when you sign, if you're helping somebody fill that form, just make sure they cross out that declaration because technically they would be doing something wrong. Just because the form's wrong, you don't have to do something wrong. Now, here's where ownership, or rather, that example that I gave you comes into play. If you're a citizen who's non-resident, right? Citizen means 1.2 million relief and 5% final tax. So that's this green line, okay? The point at which the green and the orange line intersect is round about 3 million bucks. If your interest income, if you have only interest income and it exceeds 3 million bucks, it becomes cheaper for a citizen who's non-resident to hold it because their effective rate is lower. But below that, it is better for a citizen who's resident who has no other income to hold it, right? And non-citizens who are non-resident don't have the 1.2, and it's the simple flat 5% withholding tax. So that's how to look at it. Cool. Now we're going to move to rental income. Right. Now, if we look at rental income, for non-citizens who are non-resident, 1.2 million is not available, okay? Then, if you have interest income, now we discussed interest income. No, we didn't for non-citizens, sorry. So for non-citizens who are non-resident, again, 5% is final. And here's the benefit for a non-citizen who owns a property here, who's non-resident. Rental income is 10% final tax, okay? Right, so now bringing the same type of graph up so you can kind of picture and imagine at which point to make these decisions. The citizen who's non-resident versus the non-citizen who's non-resident. Sorry, the citizen who's resident and the citizen who's non-resident are both entitled to the 1.2, right? That's personal relief because you're a citizen, you're entitled to it, whatever your income is, right? So don't worry about your income stream. Citizens are eligible. Now, if they both start here, right? Both start here, they're all eligible. Okay, then it's just two different rates. The citizens get the 25% rental relief. So they have a lower gradient curve, citizens. Residents. Non-residents don't get the 25% relief, and therefore they pay at a higher rate. Okay. But if you're, let's say you're married to a foreign national who's a non-citizen and a non-resident, then if your income exceeds 3.3 million rupees, right? Then it's cheaper for the non-resident to own the real estate. Okay, so you need to then start thinking about how much money do you earn from the asset? What is your tax liability? What is the cost of gifting this asset to the non-citizen? If that's possible, because you have to be a little careful about alienation of property, because all the money to buy the unit should have come from abroad. There are a few things like that. And then transferring it as a gift, again, a different set of rules. This gets very complicated, so I'm not going to go into it now. But there are benefits to be extracted. Now, this is a section I need to go through fast. We're going to run a little bit late, so sorry. I've just tried to cover things in as much detail as possible, right? So if you're a self-employed person or a consultant type person, please invoice USD income to your personal name so that once you receive it, it's tax exempt, done, finished, nothing to worry about. If you are able to invoice through a company, invoice the rupees through the company and then expense things. You can also expense things as an individual like a company does, but you have to be a little careful there. If you visit Lanka.tax and click on directors and lawyers and professionals, we have a section there where we've put a bunch of pictures of the different categories of expenses that you can claim. And within those categories, even a detailed list of all the stuff that you can claim, right? We're not gatekeeping any information here. We want you to save money on taxes and pay the right amount. Overpaying deprives your own family of the resources that you have worked very hard for, right? So, yeah, just go through those slides. Now, here's a cute thing that I really enjoy doing. We helped a relatively high net worth individual buy a property. Such an interesting case study this is, at least for me, right? We projected their rental income. They bought a commercial building which had a steady income stream from a software company that was growing, and they had a 9-year lease, right? This lease was for 900,000 a month. Now, sorry. So, right, the property was going for 92 million with the costs of transaction and a few other things like that, came to a little above 95. Okay, so excluding stamp duty, by the way. So anyway, the property was purchased at 95. My client put in 50 million of equity. We helped them obtain a loan of 45 million rupees. We got a fixed rate for at 12%. It was fixed for 8 years and then renewed. But there are, okay. So what happened here was that monthly payment on that fixed installment came to 645,000. So let's just consider the first 2 years, because you can always refinance, right? And we'll go into that later. But at the so the first year, almost the entirety of the 645 was interest, because we also got a 6-month grace period. Now, after 25% is reduced from the 900,000, right? Their residual income was 675,000, right? So 675, now this is a unique case because the rental yield was very, very high. So 675 minus the actual interest cost, because you can claim the interest cost if you incur the interest to purchase the asset. If you refinance the property later, it is unlikely they'll allow it, right? So we took the loan to buy the property. We didn't refinance. You have to be careful about that. So the 675 minus the 645 meant that they had less than 30,000 rupees a month in taxable income. When you now if this client had only that money and only that asset, they wouldn't have even paid tax that year. And let me show you the summary. It's crazy, right? They invested 50 million of their own money. Okay. They had a tax liability, taxable income of only 30,000 a month. Okay, before I go into this, we're getting a lot of questions in the chat. Can you please put them in the Q&A, because we're almost done. We won't be able to look at both, so please put them in the Q&A. Right. So for this client, from the 900,000, the 25% that is rent relief, they got to park in their pocket at 255,000 a month. Done. Sorry. Cash flow wise, they received 900. They paid 645, so they had 255 to pocket every month. Then that is $3 million a year. Okay. But that's tax free because that's your relief. Right. Then if they had no other income, they would have had zero tax liability after getting $3 million. Then the property if they bought was, let's say, 95. In 10 years, it'll be worth 150, maybe 200 at least, no? Right? Because don't forget the rupee loses value. Now, but how much did they put into it? Right? They put only 50. So they're collecting money. I mean, it's beautiful. I really enjoy this transaction. Yeah. So they've made a killing. They've made monthly income and they paid nothing. Okay. Quick wrap up. We looked at income sources, what's tax-free, what's taxable. We looked at how to claim deductions, relief. Then we looked at the difference between citizens who are resident, non-resident. Then we looked at non-citizens who are non-resident. Then we looked at profit, how to make money off real estate on a complete tax arbitrage. We looked at future taxes that are coming up from the IMF in terms of property tax, gift and inheritance, how they're going to apply the primary residence exemption. Right. Now, the last couple of things I want to say is, what do you need to do now? Now, you've listened to this for a while. I'm surprised we still have most of the audience listening. Thanks for staying. So, what do you need to do? First things first. Collect the right information. Don't get the wrong information. It makes the difficult because look, it's so close to the deadline, the banks are busy. Everybody who has to give you information is already overloaded. You can't afford to get your information, even if you're going to get it late, you can't afford to go back and bother them again, right? So collect the right information by requesting the right information. So you can create a profile and download that information completely free of charge. Then you can track your documentation. What did I collect? What did I not collect? Again, click on upload documents. You can upload stuff and then it'll automatically tick what you have collected, what you have left. So you don't have to keep worrying about, did I get this? Did I get that? And if you have a profile, we will send you reminders before each of the 7 deadlines well in advance, right? We will send you tips on how to improve your tax efficiency as well, right? I hope you understand here that we are not gatekeeping anything. We're really happy to share. Yeah, and I really thank the team for inviting us. Now, if you need us to do any work, we've built our own AI. We have a fairly large software engineering team. Actually, we have more software engineers than we have accountants. To build this software in a way that it's scalable and easy to use. So we use AI to check the calculations. We can provide a guide for you to file your returns yourself and save a lot of money. Or you can have us do it for you if you think your time is worth more making money. You can pay your fees online. Obviously, your documents are all digitized this year, so you can access them with ease next year. Yeah, that's us. Then okay. Here's the other thing. When you log into the customer menu, so you create your profile by clicking on the start button and going through that. But once you've created your profile, you can log in. Once you log in, on our menu at the very bottom, there are TIN and PIN request letters, right? Now, I'm going to try and zoom in. Please excuse me if it doesn't quite work. Right. So when you try to log in, your PIN gets reset, right? And these resets happen periodically. If your PIN is not right, then you need to, it might warn you saying, especially if you're a forced registrant, right? If they registered it for you, they may not have your email address and therefore they'll say, hey, it doesn't match with your registered email address. So you need to watch out for that. And we have a request letter free where you can just click request. It'll come with all your information pre-populated so that you can then just forward that to the IRD and they will issue you a new PIN. Then when you start looking at right, so you can also do, okay, once you log in order to file a return, you may not have the return appearing on your system or on your IRD portal. Now, our portal is different, theirs is different. On the IRD portal, if it doesn't show, all you need to do is go to e-services, return issuance, self-issuance, and then you can select the year and issue your return correctly. So that you don't need anybody else for, you don't need our system, you can do it yourself. Now, sometimes if you're trying to click on, I forgot my IRD PIN, and it says, hey, you don't have security questions and answers configured because you opened your tax file by yourself manually with paper, then it could say you don't have security questions and answers, this thing, at which point we have another letter to reset the PIN only, not change the email address, right? All of that is free. Right, I think, yeah, we've explained what we have. I'm going to try and go to the opening slide. And may I request Nilanthi to start the Q&A, please? Okay. Okay, great. I love the first question. I can see it. Nilanthi is here. Excellent.
Yes, I just can't open my video.
Okay, no problem. Shall we go through the first question, Nilanthi? Could you read that out?
Yeah, we have a couple of more questions. I will pick up a couple of them. So the person invested money fund in NDB Wealth Fund. How to pay tax on increased value of unit price, which means the unrealized profit.
Excellent question. So, anonymous attendee who asked that, great question. Okay, so I need to give you a little bit of history. In 2021, some assessors at the Inland Revenue Department said you can pay capital gains on the appreciation on realization. But some said no, the underlying instrument is an interest-bearing instrument, and the purpose of a unit trust is to be a tax pass-through, right? So, because it's a tax pass-through, you have to pay on the appreciation of your units or the total gain as they send it to you. And some will send you the realized, unrealized. You have to take the total gain and pay tax on that amount, right? Even though you have not realized it. So you're paying taxes on unrealized amounts, which is, kind of sucks. But that is what it is. And that's the treatment they are accepting today. Then there's one other thing there. Oh, now, a lot of salespeople of these money market funds, they're mostly money market funds. Now, there are two types of funds, right? If you're in an equity fund, you don't have to pay any tax. If you're in a money market fund, you do need to pay tax, just like interest income. Now, here's where the unit trust kind of hurts a little bit extra. It's barely an impact to us, but I'll explain the theory behind it. Unit trusts invest in interest-bearing instruments. Those instruments have 5% withholding tax already deducted and paid to the inland revenue. But because these instruments are within the unit trust structure, the unit trust cannot issue you a withholding tax certificate on the amounts deducted already because they are not the withholding tax agent, right? So you have to pay the full 36% there, whereas on a savings account or a FD, you would have only had to top up 31%. That's an interesting one. Great question. Super. And Nilanthi, the next one.
This is for the solar expenditure related. If the solar is taken using a bank loan, can we claim loan installment, including capital and interest both?
So, Gayan Chaturanga, thank you for asking that. Wonderful question. I'm really glad you asked it because, to be very honest, I missed that. Sorry about this, guys. I missed it. And you can claim both capital and interest that you pay for the loan that you take to buy your solar power system. So definitely do it. Please do.
Yeah, we have a simple...
T-bill interest is taxable. Bonds are not. T-bills are.
Yeah.
But even bonds, if you don't hold the bond to maturity and you dispose of it, you have to pay on the capital gain. Typically, we find those sort of situations arising only for our HNI clients who have managed accounts where, let's say, Linear Wealth or NDB Wealth or Cal Wealth Fund or many of these funds will invest on behalf of that person, at which point they get a withholding tax certificate. So careful. Next one, please.
Yeah, we have one question regarding rental. So the rental relief, is this applicable for non-resident as well? Then regarding that also, 1/3 of taxable income.
Yeah.
How do you do this practically? Because the taxable income comes after deduction of relief, which depend on the taxable income.
I'm not sure what this 1/3, where this 1/3 comes from, because
Yeah.
it's 1/4, 25%. I'm just going to pull up that slide so you can see the context of what I'm trying to talk about. Right, there we go. So, rental income, if you're a non-resident, what was where is this again? So rental relief, if you're a non-resident, you don't get, just give me a second. I'm getting confused because this slide is the wrong slide. I haven't put in the slide for citizens who are non-resident. Oh no, I have. Sorry, wrong slide. So the 25% rental relief is available. The non-residents are eligible for that relief. But your withholding tax is not final. You have to top up. So that's what it is. Just watch out. It's 1/4 that is relief, not the rest. Then, sorry. Yeah. So if you're non-resident, you don't have the 25% relief. You don't have it. You don't have it. The 25% relief is not available if you're non-resident, which is why this graph shows the slight difference. Okay. Next question, please.
Yeah. If you are living in Sri Lanka but working remote for an overseas organization,
Yeah.
income you gain from overseas, it is exempt.
It is still exempt, but like I said, the IMF have hinted at it. They've said there is a need to take away these exemptions. Okay. So that's one. Second thing is the Inland Revenue Department has started asking you how much exempt income you have earned. So please use it while it lasts. If you have money sitting in bank accounts overseas, remember, you have to be very careful. Don't use these funny systems like Wise. You have to be careful about Wise because sometimes it comes as a local payment. So you just turn tax exempt income into tax liable income, right? So be careful. Make sure that it shows that it's coming from overseas because the act is very clear. It has to come in foreign currency. The fact that Wise shows you balance there and pays you in rupees, the Inland Revenue won't care. It has to come through the banking system in foreign currency for it to be tax exempt. Next question.
Yeah, this is very interesting one. Are retired housewives required to open a tin, and do they need to file a return even if they don't have any income now?
So everybody, Nilanthi, I will require you to repeat there are 3 parts to that question. I'll answer the first one, and then please repeat the question. I'll answer the next 2. So everybody above the age of 18 is required by law to open a tax file. That doesn't mean you have to file a tax return every year, but you have to open a tax file. And you can't do things like open a current account, apply for a building plan, those things that I covered, if you don't have a TIN number. So register for a TIN number until you activate your tax type as individual income tax, you won't be bothered by anybody. Now, retired housewife. Okay, can you ask the second 2 parts, the second and third parts of the question?
Do they need to file a return if they don't have any active income now?
No. Now, a very clever person is asking this question. I might almost get trapped here, right? Passive income, active income doesn't make a difference. right? Like I showed you on one of these slides, all your income sources, you put them together, other than government pension and foreign income, put them all together, and that is what you must look at. If that is above 1.2 million for the year or 100,000 a month, then you are required to file a tax return. So very clever question, almost got me in trouble. Very good. Next one.
Right. Wilco.
Okay,
So
sorry, I see a question here which I love. Can I answer that?
yeah, please
It's
do.
from Soumya Dharmaratna. Could you read that out, please?
I voluntarily registered for IIT tax type just this week. So do I have to file for 23-24, start by 24-25 year of assessment?
So I think I covered this in my myths thing in the first couple of slides, but I'll explain it again. Good question. Please don't be naughty. The law says that if your income is above 1.2 million for 23-24, you need to file a return. So if you qualify there, please file a return. The tax department is getting very tough with tax evaders because that's what you'll become. If you had the income and don't do it, tax avoidance or tax planning is legal. Please do that as much as possible. Use our tools, but don't evade. You're going to get in deep trouble. Yeah. So technically, now here's the thing. The Inland Revenue System, if you just got a TIN and registered for IIT, the system may not show the return, the tax type starts from a certain date, and therefore on the system, you cannot issue a return for the previous period. Now, Samya, this you will face as a real problem. Even if you want to file, you can't. But that doesn't exempt you from the requirement to file. If they penalize you, they whack you with a penalty anyway because it's your fault for not registering in time, is what they'll say. Not that I think that. But what you need to understand here is even that letter, tax type backdating, right? You need to backdate your tax type and then issue a return. Even that letter is available on our customer portal for completely free. So create a profile, just log into the menu, download that, you're good to go. Next question, please.
Yeah, so this is with regards to property taxation. They're asking, this property taxes imports on lands as well.
Yes. Land, building, residence, anything, even if you're not earning a rental income from it, you will have to pay an imputed rental income tax. So they get you to estimate a value, then you'll apply a percentage to that estimated value, or they'll tell you a method of valuing it. And then you have to pay tax on this imaginary income, right? So if you have unproductive assets, please make them productive.
All right. This question will be applicable mostly people living outside. They're asking, what is the tax impact of sale of listed securities? Basically capital gains. Yeah.
Capital gains on the Colombo Stock Exchange are completely exempt from tax. If you trade on a foreign market and you're a tax resident in Sri Lanka, please note you will have to pay by law, technically, whether the inland revenue, whether you choose to declare or not. I mean, that's a different question. I'm not answering that. Gains on the Colombo Stock Exchange are tax-free. Overseas stock exchanges are taxable. So dividend income, look, whether you're resident or non-resident, don't stress about, just because we covered capital gains, I'll cover dividend as well, as a related thing, right? Dividends will be deducted at source 15% final tax. So whatever dividend you get, it's all done, no problem, just declare it. But when you fill the form, you have to be very careful. Please don't throw away your dividend warrants, because some warrants will not match up to the dividend. For example, you might get 850,000 rupees as a dividend. And in some situations, the dividend may have been 100,000, it may have been a million rupee dividend, of which you've got 850 to hand, because 15% has been withheld as final tax. But if a dividend is paid from a dividend, then you don't have to deduct that 15% again, right? So it won't match up directly. So look through your warrant if you're doing it. But you still won't have to pay anything extra. It's just that the calculation may not match up when you enter it into the IRD system.
All right. This is a very much expected question. So
Yes.
what is the tax department approach and guidelines on Bitcoins and other digital assets like
Okay. Because this is a public forum, I have to give you my official answer.
yes.
You have violated the Exchange Control Act by purchasing Bitcoin, right? Even if you bought it on the secondary market and you paid somebody rupees, they have violated the Exchange Control Act by buying Bitcoin. So I have no opinion on, I have to politely decline sharing an opinion on Bitcoin tax.
Good. So there's one question.
Sure. Go ahead, please.
Yeah, if one redeems units of a unit trust, can that be treated as capital gain?
Sorry, just because you redeem it doesn't mean that you can beat the system. So funny thing, right? In accountancy, we've always been taught substance over form. And sadly, it does apply, right? The underlying instrument is interest bearing, and therefore you have to pay it as interest income. You can't pay it as a capital gain unless it is an equity fund.
All right. So that's ends the Q&A session.
So one quick thing, Nilanthi, if I may just address the audience.
Yes.
Ladies, gentlemen, it's been really fun having you here. I've tried really hard to try and explain everything here, but I really value feedback, right? So if you can drop a message in the chat, which will tell me what to do better next time, right? That's feedback I can go back with and improve the experience for other taxpayers going forward. Could you please give me your feedback? And look, I have very thick skin. If it's bad, just say it's bad. Hello. Nobody's typing. Maybe you're still typing. I'll wait. Sorry, Nilanthi, I hijacked the conversation. I'd like to pass it back to you.
No, we will just give 2-3 minutes and see, and then we can end the session here.
While we're waiting, Nilanthi, I think I'm again speaking out of turn, but I'm really grateful to the team at Sri Lanka Kuwait chapter, President Riaz and your team, Nilanthi, Tarindu, Nabil. Thank you all very much for having me. I've enjoyed my time here, and yeah, maybe we'll do some follow-up sessions if the nasty new taxes come in and we have naughty ways of avoiding it.
All right. So then let's end the session for today.
Awesome.
Yes, so members, I mean, we already have shared the link. You can claim CPD credits using this link. Just fill the form and then you will be getting the credits. Also, Mr. Mahesh, we are extremely grateful for you for conducting this session. This was very valuable for us. You provided us with this opportunity to gain knowledge and insight about personal income taxation. I believe that this was very much needed for all of us this time. So thank you again for accepting our invitation despite your busy schedule, and also for your collaboration with the team when we were organizing this seminar. Also, for the participants, on behalf of the executive committee, I extend my sincere thanks to you for your attendance for this seminar. I hope the topics we have covered was useful for you and you were able to boost your knowledge about personal income taxation in Sri Lanka. Finally, a big thank to our executive committee members for organizing this seminar. Once again, thank you everyone, and we look forward to seeing you at our next event. Until then, have a great evening. Thank you.
Thanks, guys. It's been wonderful. Like, privileged to be here.